What's going on, everybody? Welcome to a capital hungry market analysis and trade ideas on gold. So here, looking at gold on the daily time frame, you can see even though we've had some pullback and exhaustion from those key historical high points digging into the 2050s, gold is still remaining overall very bullish on the higher time frame and intraday. We can see that it's very common for gold to do these aggressive pullback legs and corrections to retest higher time frame structure, but we don't really have any signs of seeing that just yet. Right now, you can see we're still holding in this price sensitivity area above the 1980s, showing us a lot of exhaustion from here. At the same time, we haven't had any fundamental catalysts to lead to a shift in structure or, of course, for some more dollar strength. Market sentiment wise and intermarket correlation wise, we're still seeing that other risk asset classes, such as the equity markets, are still holding bullish. And then in terms of dollar sentiment, we're still seeing that dollar on the intraday is bearish, rejecting bearish market structure and still holding below 102, with potential to revisit previous lows at 101, still moving down in this bearish channel formation, with sellers just printing these lower lows, having these short-term pullback phases and still extending trend. As long as I still see more demand in the equity markets as well as dollar is still softer, it shows me fundamentally that the Fed pivot prayer narrative in declining inflation data from the previous weeks is holding the most weight for the time being, still keeping gold bullish, potentially trending back up into the 2000s. So that's what I want to be looking at for here and just understanding what events we have in play. Now, understanding structure, we can see that it's very common for gold to have these aggressive pullback and corrective waves in price. But for us to even anticipate seeing some of these aggressive pullbacks and corrective waves in price, we will need to be trading below 1980s and more importantly, the 1972 key level. And we would need fundamental catalysts to be supporting that movement as well, which here is going to be listed as dollar strength, optimistic US data, higher US inflation figures with PCE in focus this week. If we don't get these confirmations from a fundamental perspective, as well as the technical breaks below the 1972 key level, then it's very difficult for me to see this corrective wave in price. Instead, we could easily still be trending back up to these intraday price points before really showing more signs of exhaustion and starting to have that larger corrective wave. Now, overall volume and volatility in gold has started to dissipate as a lot of the major fundamental catalysts from the banking sector fallouts to central bank rate decisions have been priced in. But from a market structure perspective and intermarket correlation perspective, as long as dollar still holding below 102 and trending bearish down to 101, we're still seeing that demand in risk assets such as equities, and gold is still holding above the 1970s and 1980s, then we're still respecting the Fed pivot prayer narrative, which is still keeping gold more bullish on the intraday and higher timeframes, with potential to be revisiting the 2020s before seeing any major signs of exhaustion or sell-off. From current price points of interest and current fundamentals in play, I could only be seeing sells below the 1972s. Now, we're going to be diving deeper into the intraday timeframes. We just want to understand what events we have in focus. We haven't really had anything to start out this fresh new week, and a lot of the more important economic data is on Thursday and Friday. GDP figures, PCE inflation data, and some more important figures on the Friday there regarding the actual PCE figures. So, to start out this week, we've been relatively low and slow in volume and volatility and haven't had much economic data in focus. We don't really have much going on overnight, but during our North American trading session tomorrow, we have some housing information data, but more importantly, consumer confidence. We have seen that retail sales have been starting to feel the heat and seeing some negative declines as well, but we've seen some recent revisions for it. But overall, economic activity in the US has been declining. If this consumer confidence comes out lower than prior and lower than the poll, this can still keep dollar more bearish, trending down to 101, and gold more bullish, holding above the 1980s, potentially going back up to 2000s. Other than that, we don't really have much else in focus until later in the week in terms of economic data on Thursday and Friday. Obviously, still keep an eye out on your headlines, as we have to stay very sharp, looking at reactive events such as any new fear, uncertainty, and doubt coming to the scene, geopolitical issues, military tensions that are escalating, and so forth, that can also keep gold more elevated if those reactive events come into play and the markets start pricing it in accordingly. Also tomorrow, just some Federal Reserve speakers scattered throughout the session. So gold on the intraday here. Now, from these highs printed by buyers, we've just been seeing an extended pullback phase to be retesting better buy zones of interest. We're showing a lot more exhaustion by sellers and more buyers jumping in with failing to break or print any new lower lows above the 1972s here. Now, what we can see is if we fail to print any new lows, as long as dollar stays relatively softer, then we can see more buy-side liquidity being accumulated from these better price points of interest and still trending back up, in my opinion, to last significant intraday highs and the last CPI rejection price point into the 2020s. I would be looking at buy areas above 1988's, 1981, and 1997, still having us trend more bullish from this better demanded price point of interest, with market sentiment confirms of dollar weakness, risk assets like equity still holding some demand, and especially if we get weaker US economic data tomorrow to support that bias with consumer confidence. From current price points of interest, I can only really see gold sells or deeper downside plays below 1972 as my secondary adapted bias. We're still respecting intraday bullish structure. We're still having buyers print these higher highs. Even though some of the pullback phases can be aggressive, they haven't led to a complete shift in structure yet. We're starting to show a lot of exhaustion at these 1970s area. The same time, fundamentally, with market sentiment and intermarket correlation confirms dollar still bearish and more demand in your equity markets, showing us that the Fed pivot prayers narrative is still holding more significant weight on the intraday and higher timeframes here. Bringing that information together with our higher time frame key levels and zones of interest, my main bias is as follows. Where I'd be looking for these areas as the main bias in buys from these technical confirms as well as fundamentals, would at least be expecting us to dig back into the 2010s again. Now you can see, as we've had lower volume and volatility, we're showing a bit more indecision and a bit of a technical range and consolidation being created here. I would only be looking for gold sells from current price points with breaks below 1972. This would be my adapted secondary bias. If my buys are obviously incorrect, we get technical breaks below 1972, optimistic US data, dollar breaking above 102, hawkish Fed pressure, which we just have some Fed reports on business activity. I don't think we have any Fed speakers, and we have a blackout period till next FOMC. and breaks below key zone and level 1972. These are some trade ideas that you can use for day trades and scalps from these price points of interest alongside the confirms over the next couple of sessions with some of the more important economic data in focus this week. That's going to be your main sentiment and bias on dollar, US equities, and gold on the Thursday and Friday with GDP and inflation figures.